Welcome back to the Am I Rich Yet podcast, a weekly podcast for millennials and Gen Zs where we talk about all things money. We are on episode 26. This is the final episode in our series that we've recorded this summer, and so it's a bit of an emotional, exciting episode. We're going to be talking about something not fun, insurance, to round off our series. And then we're also going to be closing with some final thoughts and comments from the two of us. So if it's your first time here and you're starting with this episode, step it back a few weeks, start somewhere else. But my name is Georgia. I'm one of your co-hosts. I myself am a Gen Z MBA student and navigating my personal finances.
I'm Rob. I am Georgia's dad. I am a recently retired financial advisor, and I've been here all along to help you make smart decisions with your money.
Welcome to Am I Rich Yet? Are we going to start off with questions, or should we keep those for the end? Because we're going to
I'll leave those for the end. So what are we covering again? Insurance?
Insurance.
Oh my goodness, run.
Oh my gosh.
Run. So let's look at insurance.
You know what? I'm a funny place to start. When we recorded our very first episode one in one of our variations, because we had to do a few to get things rock solid, we were going over the goals, and I remember saying, you talk about insurance with your clients, but I don't think insurance pertains to me. And we laughed because it's one of those topics that maybe someone young, full of life, feels like insurance doesn't relate to them that much, but it's really important in terms of your financial health as a whole. So
It's a piece. Absolutely.
you're going to ask me my experience with insurance.
No, I
Okay.
wasn't. I was going to ask you, you had a car.
Yes.
Did you have car insurance?
Yes.
So you insured your car. You haven't got a house yet.
No. But I have
Do
condo.
you think we have insurance on this cottage?
Yes.
In case of a fire or vandalism or
Yes.
earthquake or who knows what? Forest fire?
Of course. I've also had apartment/rental insurance since
Okay.
I got out of my undergrad.
So when it comes to what's the most valuable thing that you have?
My health.
Your health,
Yes.
right? But most people don't have insurance on their health.
True.
So that's why we're going to have this discussion. I think it's an important discussion to have. Do you need tons of insurance? Absolutely not. But you do need some of the basics depending on your different stage in life. So we're going to cover that. Some of the best times to think that you need more insurance. Number one, if you're getting married. Number two, if you're having children. Number three, if you're buying a house. Those are the 3 times you need to do it. Or if you're in a dangerous job, you need probably some life insurance. What we're going to do today, we're going to cover the different types of insurance. There's 3 basic types that we're going to look at: whole life insurance and life insurance in general, disability insurance, and critical illness insurance. So we're going to start with term insurance.
Okay.
So what term insurance is, so we have Georgia here, she's 26, and if she looked at when she was working in the working world prior to her MBA, she was part of a company, and they probably had a policy there. It would have been a term policy, a 1-year term policy, and it probably would have been maybe 1 times your income. So if you died, your beneficiaries, and you may have had your partner at the time, or it could have been your brother and sister as your beneficiaries, or it could have been your parents. That's typically called group insurance, but that's what term insurance is. You can also buy personal term insurance, typically in 5-year, 10-year, or 20-year periods. When I give the period, it just means that whatever you're paying is locked up for that 5 years. So if I decide to buy a 5-year policy, in 5 years it renews, and I'll have to pay a higher amount for that insurance. So let's use the simple example. I'm going to buy $100,000 worth of insurance, and I can buy it at 5-year, 10-year, or 20-year. It's more expensive to buy a 20-year policy, but you don't have to deal with it 5 years from now. So you'll pay a little more on your premium to get a 20-year policy than a 5 or a 10-year. The cheapest would be a 5-year policy.
And how much does that cost you a year? And is term insurance essentially
It
just
would
life
be-
insurance?
It's just life insurance.
Okay.
So in the event that, and the probability of a 26-year-old female dying isn't that high. It's certainly probably not because of health reasons. It may be other reasons, dangerous things you might be doing, but it's relatively cheap insurance. So I call it cheap and cheerful. You pay for it on a monthly payment or once a year, and it renews. What renewable means is you can renew it without having to get a check on your health.
Yeah.
So sometimes that's a good thing to have. So that's life insurance. Do you need it if you're 26 with no dependents? Probably not. You may be covered from the company that you're working for.
Or your academic institution. I think like most universities and colleges have.
So you get to choose who your beneficiary is, who's going to receive the money, and they receive that money tax-free. So that's one of the beauties of life insurance. The money is paid out tax-free. Once again, it could be a friend, partner, siblings, parents, whoever you choose. Next up, very similar to term insurance, but it's called whole life insurance. So why is it called whole life? Well, you have it for your whole life. Much more expensive because now we're insuring, if you're 26, you could have this policy at age 100. It has two sides to it. It has the payout. So maybe you took out let's call it a $100,000 whole life policy, but over time, some money comes out of your premium and goes into a side account that also gets paid out. So when you die, your beneficiary might even receive $200,000 or $300,000, depending on the policy. Most whole life policies, people will pay for it on a monthly or a yearly basis, and sometimes they do it what's called quick pay. They'll pay more for the next 10 years, and then they have it for the rest of their life. So there's different options there. At your stage, I don't think you need whole life insurance. It's expensive for the amount you're getting. I prefer you have term insurance.
And so the main difference is term insurance you can purchase for a 5, 10, 20-year period, but whole life, once you buy it, you're covered for life.
It's got not just the insurance side and the death benefit, but it's got a side account that builds up over time. They take a little bit out of the money that you're paying every year and they put it into an investment for you.
Got it.
Now, let's go back to term. You can buy term to 100.
Okay.
So term policies, there is something called term to 100. And what the beauty of it is, if you make it to 100, they give you the money.
Okay.
You got to make it to 100. Not many people do that.
That's my goal.
Okay.
I'm going for that.
Next up is universal life insurance. This is, again, combo insurance. It's got the death benefit just like term, and it's got a side policy, and you get to choose which investments. In the whole life policy, you don't get to choose how it's invested. You're invested in the company, whoever it came from, Manulife, Sun Life, someone like that. Whereas universal life, you can invest it in the stock market. You can invest it in bonds, this side account. A little more complicated, once again, mostly paid for in a quick 10-year, 15-year period.
Got it.
Next up is disability insurance. So there is something like a 60% chance that you become disabled before you're 60 years of age, at some point in your working career.
Yeah.
Disability insurance is basically there to cover you while you're disabled. Now, you might be out for 6 months, a year, 2 years, or even longer. Often it's part of a group plan, and typically the group plan might cover you. Here's some of the terms you'll hear. Nothing is paid for the first 90 days, so there's an elimination, they call it an elimination period, 90 days or 3 months, and then you start receiving your payments. And it's often tied to your income, so you might get 60% of your income, you might get 70% of your income.
Right.
You won't get one that pays you 100% of your income, or it may pay you a specific dollar amount.
Okay.
So I happen to have one that pays $10,000 a month. Other little trick for disability insurance, if you paid the premiums, the amount that you owe for the insurance, when you receive the benefit, it's tax-free. If your company pays for the premiums, it's taxable.
Okay.
So little things like that, but we're not doing a deep dive here. All I want to do is give the audience a quick understanding
Options, yeah.
what are these things to consider. Disability insurance, if you are self-employed, you should look at getting disability insurance. It's one of those things. Imagine what happens to your financial plan. You still got to pay rent and all those things if you can't go to work. That's not a good thing.
No.
So at least you're getting some basic money, and if it's paid out tax-free, even better.
Got it.
A lot of people shy away from disability insurance because it's expensive. I think it's a great thing to have. You're protecting yourself. If you died, you're gone. Really, it's your beneficiaries or your dependents that need to worry about it. At this stage, you don't have any of those. But if you became disabled, who's going to look after you? So I think it's good to have, and it's cheap to buy now. Insurance is more expensive as you age because there's higher risk of things happening. Next up is critical illness insurance. So I got diagnosed with cancer for the first time in 2012. I happened to have bought a policy 2 years prior to that. Didn't know I had cancer or cancer was coming. I bought a policy for $250,000. My business partner and I both bought them, and we view it as a forced savings plan, and I'll talk about that in a minute.
Okay.
Once the insurance company agreed that yes, you do have cancer, and they talked to the doctors and the medical reports, I literally received $250,000 cash free. That helped to pay for some of the treatment that I received at the time. I was able to go to Germany. I was able to pay off any debt we had, so it really helped.
Yeah.
Now, you don't need that big a policy, but even a $50,000 or $25,000 critical illness policy is helpful to have because there's a higher probability today, especially in younger people, getting a critical illness. We all hear about I go to Princess Margaret regularly and I see these 20-something-year-olds being treated for cancer. So I see it all the time.
I have a question or do you have anything else to add?
A couple little things about it. There is something on critical illness called the return of premium. You pay a little bit more every year, but if you make it to age 65 without having to use the policy, you get all the money back. Now, you don't get any growth on that money. It's like a forced savings. So that's when my business partner, Mike, and I bought those policies. We viewed it as a forced savings plan, not expecting that one of us would get a critical illness, but we did. If you've got a company, that company can help pay for that. So some neat things around critical illness. Insurance is also used a lot for estate planning. We're not going to cover any of that today.
So I got a question, just to round up, because we talked about term insurance, whole life insurance, universal life insurance, disability insurance, and critical illness insurance. Take me, 26, let's say I have zero insurance, and let's pretend I'm not a student and I'm working. What would you recommend I get tomorrow?
Because you're not working right now?
Let's say I'm working.
Okay, if you're working, you're probably going to be covered through your company.
The above?
You're going to have some term insurance, maybe 1 or 2 times your salary, and you're going to have a disability policy after you've been with the company for 90 days, typically. But that's where you want to open up that benefit book and see what you have. Okay. And if you're missing something, some companies have great policies, some don't have great policies. It all depends who you're working for. The bigger the company, the more likely that it's covered.
So let me reframe my question. Tomorrow I become a full-time podcaster, self-employed, 26 years old, my demographic, my lifestyle, whatever. What insurance should I get?
Disability.
Just disability.
Your biggest risk is becoming disabled and not being able to do what you're good at.
Before critical illness.
Think about it. If you were a professional golfer, right now, you wouldn't be able to go out and earn a living. You're injured right now. So you need that. Now, it's expensive because you're a professional golfer, but it's almost a must. It's kind of like your car or your house. You're protecting it.
So how much, so you say just disability insurance, not term insurance?
You have no beneficiaries. If you die, you die. I know that's harsh, but it'd be very sad. But no one, do your mom and dad want to receive money if you die? Probably not.
I bet Lily does.
So again, other people are going to have different opinions on it. This is just my opinion of looking at this.
And so how much would, if I was self-employed podcaster, how much would disability insurance cost me a month maybe?
It'd be a few $100s a month. Yeah. It's not cheap. Because part of the problem is there's some people who cheat the system. And they raise the rates for everything. So they say they're disabled, and yet they're out in the golf course playing 18 holes 3 times a week. You could go to work. And so that increases the cost of it. Oh, let's go back to a type of insurance we didn't even talk about. Mm-hmm. iPhone insurance.
What is it called? Apple Care.
So your brother, we don't buy insurance. You and your sister, we always buy the Apple Care insurance. It's just why?
It's paid off.
And it's even more expensive now, but it's still worth having.
Definitely.
And now I even get it for your mom. I've been pretty lucky with my phone.
Okay, mister. I have to tell the audience a story. One day, my parents were walking by the lake, and in 1 hour,
We're getting into the bone.
in 1 hour, my dad drops his phone into the lake, gone. An hour later, my mom drops her phone into the lake, I'm gone. So Apple Care applies.
Okay, there you go. We rescued one of those phones. The other has never been seen. Every year, I look at the water and I think it's going to show up and it never does. I spent hours down there moving rocks, looking for it, can't find it. It must have just shot out somewhere. Who knows?
Well, remember one of our earlier episodes? I lost a ring in there. So I bet there's a lot of
there you
bills
go.
down there.
So we've covered a lot. So that's basic insurance. And I didn't want to, we could do 3 podcasts on insurance. That's not the goal here. The goal is to give you a little sense of what it's all about.
Yeah. So we've covered the content we wanted to talk about in this final episode. Now we've gotten to the stage where we're going to do a quick roundup of everything we've covered in this Am I Rich Yet podcast series, wrap things up, and then just have a bit of banter back and forth about the experience and reflecting on some of the things we enjoyed and didn't enjoy as much. So why don't you kick it off with giving us our 5 or 10 big takeaways?
So I'm going to call it the 10 steps to building wealth. Number 1, figure out your why. What is it you're trying to accomplish? Retirement, savings, tax savings, figure out your why and turn those into some goals. And we covered that in episode 1.
And you know why I love the Know Your Why is because this year, in the summer of 2025, the Toronto Pride theme is Know Your Why. So we're very timely and everyone is talking about knowing your why because it's important.
So number 2, commit to a savings plan. Whether it's 10, 15, 20%, ideally the higher the better because it's you. You're saving for yourself. It's not for your advisor or anything like that. 15 is good. And then every year, increase it. Always tied to your income. So if your income goes up, you increase it. Pretty straightforward. Number 3, if you've got debt, determine when you want to get that debt paid off by. How old? How much do you have? What rate are you paying? How quickly am I going to pay that off? And set a reasonable amount. We talked about your debt before. It's a 6-figure number.
But so let's
you
say
can't pay that off in a year.
So if someone has a chunk of debt, should they go talk to someone to find out what that time horizon should be? Should they make it up themselves, do some research? What do you think? No, it's
I
a
think
combination
today
of
you can do a
factors.
lot of that research yourself.
Yeah, map
even
it out.
chat, you can put things like that in a chat and get it. It's not. You've already said sometimes you get the wrong answer. So put it in a couple of different ways and see if you get the similar answer. I think you will. It's a pretty straightforward question.
Cool.
And 100,000. I think I've got 20,000 extra a year that I could put away. And it's going to take you 5 years. Okay. Next up, decide who you're going to use to manage your money with. Is it going to be one of the big banks and their online service? Okay. Really good, cheap, cheerful.
Yeah.
Maybe it's one of the robo-advisors. Maybe you're in a position to start using a full-service financial advisor. Look at a couple of them. There's some great articles that come out regularly, like everything else, reviewing all of them, rating them. What's the Google rating for all of them? If you pick one with a good rating, you're probably not going to make mistakes. So that one's easy. Next, we've talked about the different types of accounts. Which accounts are you specifically going to be using and why? And how much you're going to fund them with. Is it your RSP, TFSA, RSP, open account? What is it? So that's number 5.
And don't overcomplicate it. We spoke about this topic on a number of episodes and we went over what income bracket or if you only have this much, where your best bang for your buck would be. So
Yeah.
it sounds overwhelming and intimidating just hearing. Determine your accounts and why, but do some research on it. This knowledge isn't inherent. You need to educate yourself and talk to people.
I agree. Next, a little more specific to Rob McClellan and his experience, invest in 100% equity investment. You're young. You can afford to take the risks. If you do make some mistakes, you can afford to do it. The more equities you have in your portfolio, the more successful, the more wealth you'll build, plain and simple. And why you pick a globally diversified strategy, it doesn't jump around as much. It's still going to jump around. It's still going to have years where it loses 20, 30%. But those pass very quickly. And because you're putting money in, which is our next one, on a monthly basis, you're a buyer. You're not selling. So you actually want the market to go down because you're going to buy more shares when it's cheap.
Yeah.
Next up, avoid chasing the fads, avoid chasing individual stocks. I listened to a whole podcast the other day on the risk of individual stocks. It is crazy how risky they are individually. As a group, they're not risky. Individually, they're risky. Here's just a little evidence on that. If they go back to 1920, 43% of those companies have had a catastrophic loss. In other words, they've lost, this is the Russell 3000, have lost more than 70% of their value and never recovered. 43% of the companies that have been on that index. So that's a pretty high number of failure. The more diversification, it's your free lunch. We've talked about that. Number 8, never touch your investments. Think of the bar of soap. The more you play with it, the quicker it disappears. Number 9 was set up your monthly savings. We touched on that. And number 10, and everyone's going to hate this one, but set up a budget, whether it's in Excel or whether you're using one of the programs out there or your bank's program. Set up a budget, look at it, at least monthly, pay your bills when you're using it. It'll just help you get a better handle on what you're doing.
Yeah.
Otherwise, you're just looking at how much money's in my account, I'll spend it.
Yeah.
That's not going to build wealth.
Yes, I heard this great quote that said, if you're purchasing something based on how much money is left in your bank account, then that's a horrible decision.
Know your budget. Okay. Georgia, we talked about the 3 choices. What are the 3 choices?
So the 3 choices are living above your means, living below your means, and living within your means. And
oh my goodness!
okay, for people that are just listening, our producer behind the camera, Ingrid McClellan, just shot out money again.
Wow.
Fake $100 bills.
Some beautiful. It's U.S. currency too, so it's actually worth like a buck for it. That's great.
Well,
thank you, Ingrid.
Yeah, now we just
So you had some questions you wanted to.
Yes. So this might be a bit of an extended episode. Let's start off with just giving some thanks, because we've mentioned this in some of our marketing and social posts. We're the 2 people in front of the camera, but it has really been a group of people supporting us and bringing this podcast to life. We have Ingrid McClellan, who's behind the camera right now. Woo!
Yay!
Who has spent hours and hours being there's a peace sign from her, being our producer, helping make sure the camera's set up, the lighting, keeping us on time schedule, making sure we look okay behind the camera.
Telling us to smile, to straighten up.
Fix our postures.
Stop and our camera, our microphone's rumbling.
It's been a very important job. 2 important people to shout out are Emma, Lisa, and Nicole Grella, known as Bad Gal Graphics, who created our logo and branding. And that's been I think that took our podcast to a next level. That's been great.
Absolutely.
We have Hannah Richardson, who's created these tote bags as our first official merch, and maybe some more merch will come along later down the line. There was a ton of people we reached out to who either work in film and production or media, and we got ideas on what cameras we should have, what speakers, et cetera, et cetera. And so we just want to say thank you to everyone, all our friends and family, for encouraging us to do this.
Absolutely.
Did I miss anyone? I mean,
Well, should I be concerned that the lights aren't even on?
the lights aren't on right now, but we filmed this episode. We're a little more darker than usual. Now, what I wanted to do quickly in our last couple of minutes here was just do a little reflection. I honestly wish we could have a full episode just around reflection, and maybe that comes later. We kind of talked about some after show stuff we might try to incorporate since we're pre-recording all these episodes. But there are 3 questions I want us both to answer. So I'll start off with asking you, and then you can ask me. What has been your favorite part of filming this podcast?
I think there's a couple things, but if I had to pick my favorite, it's actually been an opportunity of working on something with you. And we came up with this idea. We came up with it pretty quickly. We figured out how to do it. We figured out how many episodes, what they were going to look like. There was a lot of work in between preparing each episode, and we each figured out which job we had, and we just did our jobs, and we didn't really interfere with each other's jobs.
Exactly.
So that's been a pleasure. It was something that I might never have got the opportunity to experience.
Yeah.
So that's been fun.
And I think something I mentioned, like we both share that quick starter characteristic on the Colby Index. And I think that really showed through overnight that we had the idea and then we texted each other the next day being like, I think this has some legs.
Yeah.
And then it was even hilarious because the day after we released the first episode, I texted you and said, have you listened to the first episode? Because I got it all edited and launched. And then I texted another message and I said, I didn't want to listen to it, but I chose to put it on my drive down to Barrie, and I think it sounds freaking great. And you were like, oh my God, I didn't want to listen to it either because we felt like it was our first episode. We feel like we got a bit better as the show went on.
Yeah.
And you said the same thing, but it was great and I loved it. And I thought that was hilarious that we both were like in those same shoes.
I agree.
What is your least favorite part? Or your most challenging?
We had a short timeline. You
Yeah.
head back in a couple of weeks.
Yeah.
And our goal was, we actually looked, if we started July 1st, we had 26 weeks, half a year. So we figured, okay, 26 podcasts, you're 26, so that
Yeah.
was all lined up. But doing 26 podcasts in literally 3 weeks is what we did them. And you came out, you had this schedule that we had to stick to, and more or less we stuck to it.
Yeah.
But it was tough. And just even late last night, I was putting in the final podcast, putting in my notes.
There was no wiggle
We
room.
couldn't make any mistakes. And we had the usual technical issues because we're both quick starts. We missed some steps early on. Couldn't even figure out to get the equipment working. Eventually we did until the last podcast where we left the lights off.
Lastly, retrospectively, is there anything you would change or do differently next time?
Nothing that I would change. I always wanted, especially in where it's on YouTube, I always think it's helpful to have some little notes that pop up, but we thought on that and it wasn't worth the fight, so I dropped it. Number two, I hope that there's a demand and that people want us to continue beyond 26. If not, I'm really happy with what we've done. We weren't out to make money for ourselves. We were out to help people build wealth. And if that works for 10 people or 100 or 1,000, then we've accomplished what we set out to do.
Totally. Yeah. Yep. I agree.
What did you dislike the most?
What I disliked the most, instead of my least favorite part, some things I found challenging was one, putting out in the public this content around money that's a taboo topic. And I think what kept me like grounded and feeling motivated and like this was okay and not weird or inappropriate or whatever was just that the demand was there. Like we've had such positive feedback from people and the sheer number of questions that we got before we even started filming. Do you know, like we're talking about a taboo topic and stuff, but people want to hear it and there's a need. And so that was a bit of a challenge. The other challenge was like, I feel like from filming episode 1 to where I am now, my confidence on screen and on camera like has shot up in a really positive way. I've been a lot more comfortable and you need to let go of a lot of things when filming these things. Like we're in a vulnerable position, speaking from the heart, saying what comes to mind. There's only so much editing and stuff you can do. And there were moments where I was like, oh, did I sound stupid by saying that, or what did that come off as? But if you're not putting stuff out there and if you're not trying, then what are you doing?
No, I agree.
The only thing I would change, and I'm eager to see what the response is, but we had a couple episodes in those first kind of 1 to 10 where we were really trying to stick to that 15-20 minute time frame. And I feel like with most things we talked about, we could have expanded and gone on forever. Each topic could have been a 2-hour episode. And I think like in some of those longer episodes, we got a bit more like meat in the sandwich.
Yep.
And we'll see what the response is as the episodes release. But I'm really proud of what we put out there. And it's just been so fun. And you said it, my favorite part has been getting this opportunity to do this with you. I also learned, I think I really like working with a business partner. I think you find the person that matches you. And like you said, we both had our different jobs and responsibilities and we conversed when we needed to, but we trusted that each other was going to get the job done and have it ready in a timely manner. And we did that, and I think it flowed really great. And it's incredible to see what you can create in a short period of time when you put your mind to something.
When you're under a deadline,
Yeah,
strange, right?
totally.
It's like your last day before you go on a trip. You get everything done. And yet you've taken months to get that stuff accomplished.
Yes. There was a quote at Cornberry that said, if you're as productive as you are in the day before you leave on a trip, every day of the week, you can retire.
Absolutely.
Well, anyways,
So,
that brings us to the close.
Again, if you liked what you heard, give it a like, give us some comments, subscribe for sure, share it with friends. Anyone who you think could use this advice, share it. And if their demand is there, we'd love to do part 2. I don't know how we'll pull that off, but we'll figure that out later.
Maybe we'll bring in some special guests, maybe have some outside live caller in type things. It could be fun.
Okay,
So
thanks,
anyways,
Georgia.
thanks again.